Hello and welcome to my morning note. Let's take a trip to Brazil today, which has very quietly but very emphatically fallen out of favour with investors even as the rest of the world is rallying. Brazilian stocks are down about 9% for the year. They're down about 30% over the last 2 years. Now, is that pessimism justified? With me today with some very useful proprietary insights into this is the principal of the FT's Brazil Research Service, Brazil Confidential, Richard Lapper. Richard, thanks for being here today. Let's start by taking a look at your survey of consumer confidence, which appears to show quite an alarming fall off in consumer appetites. Take me through what this research is telling us.
Yeah, I mean, every month, John, we interview 1,500 Brazilians across the country. We ask them 3 or 4 things about economic confidence, their discretionary spending patterns and so on, various other things. What this shows is a gradual increase in confidence following a sharp fall in the second quarter last year, and then a renewed fall in economic confidence this year. Similar pattern, less pronounced in discretionary spending, which is a proxy we use for retail sales.
And take us through this concept of Class C, which you've identified as being a particularly pivotal group, as I understand.
Class C, absolutely central to Brazil's economic performance over the past 10 years. It's a group of people who live in households of between income of between $1,000 and $3,000 a month. They're big spenders. They punch above their weight.
Okay. And is there any particular reason why we're seeing that really sharp fall in confidence?
Yeah, I mean, I think there are 2 things that when we look at Class C, why their spending is falling. Why their confidence is falling. One of them is they're very indebted. There's a great deal of debt around. Right. Class C's, they're stretched.
It's been a debt-fueled.
It's been fueled by credit to some extent. The other thing that's happened is a growing concern about inflation. So we ask people what their principal economic concern is, financial concern each month. Last month, for the first time, for Class C respondents, remember this is 50% of the Brazilian population, inflation was the biggest concern.
Okay, now let's see how that maps into a more subtle look at whether they want premium products or not. Yeah. Samsung and Apple, obviously an interesting proxy for whether they go for the premium brands. What's happening here?
What's happening here is that Apple products, obviously relatively expensive products, they're very popular in Brazil, popular amongst the well-off, but also popular amongst Class C. What we've seen more recently is a fall-off in demand for Apple products, rise for Samsung, part of an international trend. But one of the features about this is being particularly pronounced amongst Class C. We're seeing the first evidence, really, that premiumization, a big feature of Brazilian markets, consumer markets, over the past decade, is beginning to weaken.
Okay, so they're less interested in paying more for more expensive.
It's still pretty intact in a lot of personal care items, shampoos, cosmetics, and so on. But we're seeing it in certain areas, and this is probably one of them.
Okay, now let's take a look at the broader macro data. This is, I think, a very startling chart. The blue line shows you unemployment, which is the great achievement of the Labour administrations, has moved inexorably downwards for a decade.
Absolutely.
Meanwhile, GDP growth has often been nothing very special, which does sound as though it could be inflationary, does sound as though it could suggest low productivity. How do we explain what's going on?
Well, I think if you ask yourself what's going on looking forward, this is a very important chart indeed, because I think one of the things to have a reasonable amount of confidence that consumer sales will continue to grow, albeit at a much lower rate than they have done, is this blue line, this incredible fall in unemployment, and the fact that despite the decline in GDP growth over the last 2 years, unemployment's continuing to fall.
But doesn't that suggest waning productivity? Doesn't that suggest problems coming down the pike, or inflationary pressures even coming down?
The fundamental problem in Brazil is productivity. Very low increases in productivity, very low investment. This is a big problem, no question about it. But in terms of the immediate outlook, there's every reason to expect that consumer sales can continue to grow and that the economy can recover slightly this year.
So does that imply ultimately that there's obviously a lot of concern about the Brazilian consumer baked into stock prices at the moment? Is that overdone? It sounds as though you're saying it is.
I think to some extent it is overdone. I think that a lot depends on the government's ability to deliver big envisaged investments in infrastructure to get productivity higher. That is absolutely pivotal. We've got to get more investment and more emphasis on investment and less on consumption as a driver.
Okay, Richard, thank you very much indeed. I think that was a very clear summation. We now know when Brazil needs to go next. It seems to me that, yes, there are good justifications for the relative sell-off in Brazil. It also seems as though that sell-off has gone as far as it needs to go for now. We now need to see whether Brazil can indeed boost its productivity.